Thank you very much, and I'm very pleased to be standing here in front of so many people to talk about such an interesting topic for insurance consumers, insurance companies, and also regulators as well. So digitalization has been a big topic for insurers for a number of years. We can see that the largest insurers in Europe, it is on almost all of their agendas, it's in almost all of their annual reports. But I would say that the insurance industry compared to other industries might be seen as being lagging behind somewhat. So you have companies that have revolutionized various industries such as Airbnb for the hotel industry, Uber obviously for the taxi industry, but even slightly older companies such as Amazon and Spotify with the music industry and the shopping industry. And there are other companies such as Bitcoin that haven't necessarily revolutionized money. I'm still walking around with cash or credit cards. But given that the concept of money is such a fundamental thing and such a thing related to governments, they have made a great change in the fact that some people, for certain uses, are happy to accept a currency that doesn't have the backing of a government. And that brings in something that I think has an alignment with many of these examples, and that is trust. So as we heard, trusting that the Uber car will turn up when you click the button on the app is really important. Trusting that your Bitcoin will have value when you go to spend it is very important. Trusting that the Airbnb room will be available and as described is very important. So each of these companies plays a role as a broker between a customer and a service provider, and part of that role is giving trust to that transaction where previously trust would have been difficult. If somebody advertises a room in a free paper for somebody to stay over a period of time, there might not be that trust there. So I think that's quite important, and that's quite important for the insurance industry, because what the insurance industry does is it gives trust to the customer that claims will be paid. And historically that's meant large companies with very strong financial backing. And similarly for the other industries that's been the case, but these demonstrate that that doesn't necessarily need to be the case for these industries. I'll talk a little bit about why insurance is a bit different later. So we have seen innovation in the insurance industry, digitalization. I put Google on here for a reason. So Google entered the insurance industry. It entered it as not a risk carrier, but as a distributor. And then after a number of years, it exited again because it found that in that business model, it wasn't effective. So despite having a huge amount of data, a huge amount of information about customers and about insurance customers, it found that it wasn't the appropriate business model to use in insurance. Now we'll see whether companies like Google, like Facebook, come back into the industry in different ways, potentially not in distribution, but potentially in data aggregation and data supply. There are other startup industries, so Trove, for example, we'll see in a minute. Companies like Insure the Box using telematics to drive the business. And then the peer-to-peer insurance, as we heard earlier, and the crowd insurance bringing together. Now, some of these companies are focused on distribution, but a lot of them fundamentally change the insurance product itself. So telematics doesn't just change the distribution, it doesn't just give a discount, it also fundamentally changes the way the insurance company assesses the risk, and it also can change the way the insurance company interacts with the customer. So giving more touch points to the customer and allowing other things to be tacked onto the product, and we'll see some examples of that later. Existing companies are also trying to revolutionize by integrating digitalization into their existing products. So that might be things like automatic claim settlement using big data techniques, obviously a continuing improvement on the speed and accuracy of pricing using more and more data as that becomes available. giving customers access to all products with that insurance company, and turning their relationship into an insurance relationship rather than a product-by-product relationship. And this is one of the key goals, I think, for many insurers, is to start talking to the customer about what they need in a holistic way, rather than talking about the motor insurance product that I'm trying to sell you, the household insurance product that I'm trying to cross-sell, etc. So it's looking at a more holistic picture of the customer. And technology is enabling these transformations if the companies can overcome some of the digital hurdles that are there. So I'm going to show a video, and I have a few to pick from. So yesterday I gave a similar presentation, and I chose to talk about Trove, but I think that this one I'll talk about health insurance. So if we watch the advert for Oscar, which is a US health insurer.
Hi, we're Oscar. Health insurance built for the way you live today. With modern technology designed to keep things simple. To keep you healthy and save you money. We put control of your health in your hands with easy-to-use tools like our Doctor Finder to help you search for the perfect provider by location, cost, or experience. We also offer free 24/7 doctor on call for advice and prescriptions right over the phone, along with a handy timeline, so you'll never forget a date, doctor, diagnosis, or drug again. And all our plans include a free step tracker that records your activity and rewards you for hitting daily goals. Signing up is simple. Get a quote, pick a plan, and become a member in less than 5 minutes. Speaking of plans, we've simplified those too, with free primary care visits, free generic drugs, and free lab tests. Want to know more about your coverage? Just give our member services team a call or talk to our on-staff nurses to learn how to get and stay healthy. Over the phone, online, or on the Oscar app. We wanted a health insurance company that worked better, so we built one. Say hi to Oscar. Smart, simple health insurance.
Okay, well, the advert sounds very good anyway. I think I use this example, it's a health insurance example, but I think it's relevant for other types of insurance as well. It demonstrates some aspects of the digital insurance which are quite different. So in terms of explaining the coverage to somebody, there's not a simple coverage, because when you go to the doctor, you then have certain choices about what level of service you can get, and that's not just based on the product you've bought, it's also based at the time of claim. So you can adjust the coverage throughout the time. Also, it mentioned simplification of the policy document, and I think that's something that has been discussed quite a lot today. I'd wonder if every insurance product should have a YouTube video instead of a paper document. Maybe that's the next stage. So there are a lot of changes, and I think that means a lot of changes for the way that these products can be regulated, because a lot of the touch points also introduce areas where the insurer can also adjust the level of service and the level of coverage and the cost effectiveness of the different products. So a European example is Vitality. Similar sort of product, has integrated services with other service providers, which enables the insurance company to provide discounts on other services, and also enables them to collect data and information about their customers, which also means that there's data protection and personal data issues if the insurance company would share that with any of the service providers that it uses. So in summary, what we're seeing from the consumer perspective is and from the insurance company perspective is a change from product focus to a customer focus, making sure that all of the channels can speak to each other, so it doesn't matter whether you're speaking to your agent or speaking to your by phone to the insurance company, you get the same information. Performing more and more analytics, which I think has been a trend for the last 20 years. understanding the client better, but not just the client risk, also understanding their behavior better, and allowing insurers to utilize these other touch points that they're going to have more effectively. And also, obviously, handling large amounts of data efficiently. So, I think this has been covered by people much more experienced than I am in regulation and supervision. But these are my views on what this means about regulation and what needs to be thought about. So digital isn't just about distribution anymore. I think it was before. I think people were saying, I need an app to sell insurance, I need a website to sell insurance. Digital isn't just about that. And this brings some potential benefits. So things like blockchain, which we haven't discussed today, could reduce fraud, but also it could increase complexity if more and more transactions are done more frequently, which might involve changing of risks. Algorithms used in insurance companies are becoming more and more complicated. So that means if pricing, for example, is being regulated and being monitored, the regulator can't necessarily assume that prices will be contained in a table so much. If algorithms such as machine learning or AI is being used for pricing or for other elements, it means that it's much more difficult to explain to regulators, to consumers, etc. Some of the new products might have different risks that haven't been seen before, such as increased fraud risks. If it's very easy to buy a policy on an app or to switch it on, switch it off as you want, it might be very easy to commit fraud by switching it on just after you've broken your washing machine. And also it means that pricing fairness is something that also might need to be monitored. So when products are being sold on a daily or an hourly basis, the monitoring of the cost effectiveness of those products is more challenging. And whether it's more cost effective for a consumer to buy an umbrella product that covers everything for a period of time, or to have an app that switches things on and off, I think remains to be seen. And then the final point is the data, and I think as already been discussed, data is already a key component of insurers' value propositions. It's one of the key benefits of being a large insurer in a market. Data will become increasingly valuable as insurers can utilize it for their purposes. So if we used telematics data as an example, an insurer that owns that telematics data has a competitive advantage compared to the rest of the market who does not own that data, because they can tell whether that driver in those aspects is a better driver or a worse driver. And that means that their customer has a less easy time switching to another insurer who doesn't have that information. In a similar way that we might think of previous claims history historically having this issue, whereas the insurer who has that customer has the claims history and the other insurers in the market don't, so they have an advantage. The difference is that telematics data and similarly other data that might be collected through apps is less easily transferred to the customer and is less easily transferred between insurers, so that might be an area where supervision or regulation is required. And I think the final point on that is it's not just the customers and the insurers who own data, there are many other data providers. So for telematics, the car manufacturers obviously have a stake in that discussion. For other data, app providers, the telephone companies, etc., also have a stake in that discussion. So it's an interesting topic. So I'll leave it at there. So if there are any questions.